Well, share markets look like they want to spring higher, and the lower US dollar and lower bond yields could help the market rally up. But we are expecting another very volatile as hell week this week. My name is Jessica Amir, a market strategist here with MIM. It's great to have your company this Monday, the 14th day of April. Thanks for joining us. We are seeing US Donald Trump's flippant policy announcements, though, keep gains in check. And I think this is what we need to remember. A clear lesson that Donald Trump has only been in power for 81 days really is another wake-up call that investors may be best taking gains off the table when they have them and bunkering into gold. We're seeing gold continue to break higher. It's now up 24% this year. That said, the futures suggest a pretty mild lift for share markets today, including Australia's share market. This week, really critical though, the share markets, particularly the option pricing for the NASDAQ 100, suggests that we could see a relief rally. Now, the NASDAQ 100's options are suggesting that the NASDAQ 100, which tracks the biggest tech stocks in the US, could rally up 1.7%. According to the options pricing, with most options or bets out there suggesting the market will hit 19,000 points at the week end. And when I say at the weekend, I mean on Thursday. But markets really need solid footing to climb higher and stay at higher levels, and we could see this week from better than expected results and outlooks from S&P 500 companies. Of course, we know company reporting season is well underway. It really ramped up on Friday, didn't it? And we saw most companies deliver far better than expected results, which is another reason that markets could potentially be supported higher. But so far, let's just pause on the facts. What we do know is 6 companies reported on Friday. 5 of those were far better than expected. So this rhetoric is quite positive for supporting upside for markets. But of course, for a trend to be set in, we do need to see good results continue this week. So what did we see on Friday? Well, we saw BlackRock was one of those companies that reported far better than expected results. We also saw better than expected results from Wells Fargo and JP Morgan and Morgan Stanley. So it'll be really telling if we do see perhaps a trend emerge. But one day set of results is not really a trend. That's why I'm just suggesting that we may need to see good results, better than expected, from this week's banks who report, including Goldman Sachs out on Monday, Bank of America and Citigroup on Tuesday. So really telling to watch the KBE ETF, which is a banking ETF. Keep your eye on this. It has moved up off its lows. It should be on your radar. And then, of course, all important tech stock earnings gets underway with Netflix results being released on Friday on the 18th, depending on what time zone you are in. As for other things to keep your eyes on this week, we've got several central banks meeting and possible trade deals as diplomats meet in the US with European leaders. While we also might see some tariff reprieve rallies in tech stocks this week, just on the back of what Donald Trump announced on Friday. So we could see tech do well, as he has announced some reprieve in electronics, specifically smartphones and computers. So that could be positive for some stocks such as Apple, but I potentially would just think that we should be erring on the side of caution. Doom and gloom might be coming for tariffs on computer chips. So just keep your eye on SMH ETFs, Nvidia and the like. Basically, this week could be another volatile as hell week, probably not as volatile as last week, but we do have to remember that on Sunday, Trump said that nobody is getting off the hook. That's probably another reminder that we do need to remember that uncertainty is the only certainty in town. And with that being said, given times are wildly uncertain, we are continuing to see one asset really trump all the rest, outperforming every single share market and commodity. And as we said at the outset, that is gold. Gold has punched to a brand new record all-time high yet again, and you'd be expecting, or I would be expecting, to be calling higher levels for gold for the next several months at least, particularly now that central banks this week may be hinting that they could potentially be cutting interest rates. Obviously, interest rate cuts are supportive for upside for gold. Plus, we also have the uncertainty continuing with trade concerns. And the other thing now that is adding uncertainty into this bow of why you need to consider gold stocks and ETFs is because Iran tension is now creeping up. So if you haven't looked at gold, please do consider it. I am not a betting person, but I can bet you that gold will be far higher 6 months from now. And that's the daily. Stay safe, happy trading.